The third quarter of 2022 proved to be yet another negative quarter for global markets, with South African markets not being in any way exempt. A couple of instigators remain on the table for this, with one new instigator in place. We all know about the Fed having hiked rates and continuing to do so in an aggressive fashion. We also know about the Russia-Ukrainian conflict, which has escalated to new levels. The third instigator for the third quarter was that the gilts market in the United Kingdom sold off in an aggressive fashion following fiscal policy changes by the new UK Prime Minister. From an asset class outlook point of view, we remain bullish on South African equities, a view that we held for most of the third quarter. We also were bearish on US equities, having put on an underweight during the third quarter and having taken that underweight off towards the end of the third quarter and banking significant amounts of alpha. We remain overweight on South African equities with the view that they offer significant amounts of value at the point in time when global markets turn. Looking forward on the fourth quarter of 2022, we see that there is definitely a recession in progress, but we see that as being a relatively mild recession, certainly compared to the recessions of 2020 and 2008. We also see that the Fed is most likely to taper down on their hikes, given this probability of recession. And as a result, we see significant value opportunities emerging amongst global asset classes that came into this sell-off with already strong value bases, one of which being South African equities, another being the South African fixed income market. Going forward, even if the market doesn't reprice towards a strong growth outlook, we retain significantly high yields within the yielding asset classes in fixed income, which should carry investors forward into a strong fourth quarter of 2022.